Hi guys, welcome to this week's market outlook, where we're going to discuss how we anticipate the following week to pan out. So irrespective that tomorrow is a public holiday here in South Africa, the markets do not close, guys, so it's a very good time to be on the charts with no stress or no pressure from work whatsoever. So looking at dollar index, which is our benchmark on how we decide to frame our trades. Take note, guys, the March contract for the dollar index expired last week, so this is the new contract for the dollar index, the one with M21. So you must just refresh your market watch to get this asset on the chart. You don't want to be on a chart which is not moving in price. So looking at the dollar index, I'm just going to do like a recap of the analysis that we have been talking about for the past 3 months. And if you remember, we are bullish on dollar since January. We have been bullish, though I was not trading in January, but we've been bullish on dollar since January. And you can see the previous 3 months, the higher highs are being violated to the upside and the lows are staying intact, meaning sell side liquidity is not being raided. That means price is moving to the upside. So we are bullish on dollar index from this bullish order block here. I'm just gonna highlight it quickly. And then we also have a rejection block right here. This is our rejection block. Let me just give that a different color shade so that it doesn't confuse a bit. So this is our rejection block, and this is our, you can clearly see here, guys. Let me just highlight for you this candle here. That's our bullish order block, and this is our rejection block. That's the wick on that last down close candle. So now looking at this price action, you can see how price found support right at the 50% of the rejection block that was in January end. Price rallied to the upside. So with that said, looking ahead into the coming week or the coming few weeks or months, I am still bullish on dollar index, but that does not mean we are not going to see bearish days. It does not mean we are not going to see down days. There are going to be days like that. You see, we've had a couple of days like that since the start of the new year, but overall on higher time frame, which is our monthly, weekly, we are bullish, right? So you would need to base your trades on that. You don't want to look for shorting opportunities when you know the higher time frame bias is bullish. So with the bullish order block highlighted and the rejection, the bullish rejections zone also highlighted, it's up to you now to mark the 50% mean threshold, most importantly of the bullish order block, right? So you need to highlight that level so that you know that when price comes down here, price is in the 50% range. So now looking at this chart also, what other interesting price action that you can take note of? We had a fair value gap in here, which was eventually closed here, right? We had a fair value gap, we had a vacuum block, and liquidity void. The liquidity void on higher time frame, this candle is still offering a liquidity void to the upside. But when you see price, especially this month, you can see how we traded all the way to the lows of this last up candle. You can see how price traded all the way to the low of this up candle here. This is most probably October. Yeah, that's October. Price dipped into that candle's low but found resistance and trade lower. That is crucial to our price action. So you'll also need to highlight this month's low. This month's low represents the sell stops on the chart, and we've got buy stops above. You see, so you need to highlight this price action so that you clearly see where price is heading to on a higher time frame. Like now you can clearly see that, okay, we have price moving in a bullish momentum, right? Price is moving to the upside, and so far March price action has shown us huge willingness on the part of the market to move to the upside. There was a whole lot of institutional buying during the current month of March so far, which has got only 1 week left. So with that said, once you have highlighted these important aspects of price action that you should be able to analyze and see, then you go to a lower time frame and proceed to highlight further price action. Can you see the low of October that was breached here? The low of October down here. Can you see this last up candle? It's right in the middle. 50% of this bearish order block, price found resistance. That's not a coincidence, guys. It's not a coincidence that we found resistance here and then price dropped all the way 80 pips, right? Price dipped into a weekly bearish order block. This guy, this is our weekly bearish order block. So I'm gonna put back my silver candle, and then this line here you highlight. So this is our 50% min threshold of the weekly bearish OB. It's very important that you highlight these levels because you will know exactly where price is, right, in relation to current price. You will know that, okay, no, we are close to our 50% mean threshold of the bearish order block, and we are now almost at the extremes of this rally that happened the past 4 weeks. So you definitely be anticipating to face a bit of resistance up here, only up until we break and close above. Then we should expect price to trade all the way to these highs here. You see, this will be your next point of call, as in for external liquidity, which is the buy stops. There's buy stops above this high here. There's buy stops. So we got buy stops here. So that will be the next objective when you're trading long, but you need to see a clear close above this up candle here, which provided what? Resistance. So as it is, we are bullish. We have broken out of this range here, the range that started on the 6th of December up until 14th February. We have broken out of that range. That is crucial. That is very important in the essence that it's going to provide us a certain price point on the chart that we do not anticipate price to break below, which is this level here. I'm not expecting to see dollar trade lower than so that's 91.33. I don't expect dollar to trade lower than 91.33 because already they've run the stops. The sell stops below have been liquidated. So I'm gonna say sell stops liquidated, SSL. So these sell stops have been liquidated here when price ran through. So now I wouldn't expect price to trade lower. As you can see, this candle represents a breaker. We've got a breaker to the upside, signifying more buying pressure. So that's the points that I'll highlight on the weekly time frame. So now we're gonna go to daily. You can see already the analysis panning out. Already I'm coming to a decision where I will be highlighting, okay, so at this level I'm looking to be a buyer, at this level I'm looking to be a seller. If you don't do this, if you don't give yourself time to do such an analysis, sorry guys, excuse me. If you don't give yourself time on the chart to do this analysis by yourself, your development is going to be very slow, you see, and it might be very difficult for you to make it in the forex market if you don't give yourself time to say, okay, now let me do this. Let me not wait for Ivan to share something. Let me do this by myself and see where I'm going. So now when we are on the daily time frame, for the guys that came to class on Saturday, this is where that lesson takes over now. From here you can clearly see this low here that's coming in at 90.63. This low breached these two lows here. They cleared the sell stops, and then price short displacement to the upside and created a new high. So we've got a swing low down here, and we have a swing high, whereby there was a break in market structure here. Price was only offering buy side liquidity going to the upside, and then we came back here. We found resistance in that October low. This is the October low, guys. Let me highlight that for you. So the October low coming in at 92.450. That's our October low. So with this displacement in price, I want you to listen carefully, guys. When you show that, okay, there's the willingness, I'm not using this displacement. Reason being that I've got a new high that has been formed. I've got a new low that was formed. If I was going to use this high, I'll be using this low for me to hunt for long entries. But now with this new low here that traded the stops between 1 and 2 and the high, that's a swing high. We've got price moving from a low to a new high. Right now with this price action, with this displacement, listen carefully, guys. With this displacement, I would know already that there is the willingness on the part of the institutional traders to move price to the upside. There is a willingness on the institutional side to move price to the upside. Now with that said, I'll be looking for areas where I'm going to be a buyer. Now this bullish momentum, the focus that I have on dollar index, when you look at the bond market, when you look at the 30-year, the 10-year and the 5-year bond, you can see they are bullish. And money 6 yield, we all know that from the classes, money 6 yield. So dollar has got some catch up to do. If you see the movement in the bond market last week, the way they moved, dollar, yes, did move to the upside, but only after FOMC, right? But if you see the way the bond market moved, and if that move in the bond market is not fooling us, then dollar has got a lot of catch up to move to the upside. So now I'm going to place my fib from this low to this high. The reason why I'm incorporating the fib now is because I need to highlight a specific price point where price is going to be in the discount range. I'll be highlighting price point where I'll be expecting discount prices for me to be a buyer. So now I'm gonna grab my fib to the low to the high, right? From the low to the high. Now look where my 91.335 is coming in at, right at the 62% retracement level, right? We've already had the sell stops being run here, right? The sell stops have been ran, the ones below 91.339, and that's where my 62% price point is coming in at. So coming back to the PD areas, the premium and the discount areas, with the fibs on the chart, with my fib 2 on the chart, I can clearly see that any price below 91.57 all the way to 91.027, this range, the range that I've just highlighted, is going to offer discount price, meaning I could be a long trader. I could be a long trader when price drop in this range, right? That should be clear enough. If you're in the mentorship group, you should know already what I'm talking about here. Anytime I see price dropping below 91.575, that's a discount range. So in other words, we are practically saying it's cheaper to buy DXY when it's below 91.57. Now I'm gonna go to H4 so that I highlight the areas that I'll be looking for. Okay, so we are just like here. So with that said, when price drops below equilibrium, I'm looking to be a long trader, right? When price drops below equilibrium, I'm looking to be long. Now when price comes down here, when you look to the left, what do you see? That's when you hunt for discount areas, right? You need to be hunting for discount areas. You can clearly see we've got this low here, right? And this high. There's a fair value gap, and that fair value gap is falling within the discount range, most importantly below the 62%. You see? And here we've got a what? A bullish order block, meaning I can be so precise. My price action skill will be so precise in such a way that I'll be expecting to be a long trader here at 91.352, or if price drops all the way to 91.187. You see, this area and this zone is the ideal area for you to be long on DXY. I'm going to leave Euro USD out of this because I want you guys to look at Euro USD and then you do your analysis based on this. what I've done here. So you won't be saying, oh no, I don't know what to do on Euro USD. You should know what to do. We are long on dollar from 91.352 or from the 91.187. 62% price point represents an entry point for someone who's aggressive, right? Aggressive trader. If you are not that much of an aggressive trader, then the 70%, which is our optimum trade entry, the 91.187, is your ideal area to be long on dollar index, with your targets set at firstly at the 92.50. That's your target 0. Then target number 1 all the way up until 93.029, and target 2 93.69. You see, look where the buy stops are located, right above the symmetrical swing, this level here, the weekly bearish order block. So with that said, guys, I hope you have understood what I'm trying to portray here. We've got a bit of a range that could offer even good opportunities, but it's a bit risky to trade short now on DXY. Only when price comes down into 91.35, then you should be looking to trade long on dollar index. So yeah, that's pretty much about it for this week's outlook. You're gonna have to apply this now to your Euro USD, GBP USD, USD JPY, and USD CHF, USD CAD. You have to apply this analysis to those other assets. So yeah, if you haven't joined the mentorship group, unfortunately you are going to be seeing this video on Wednesday, and most probably price would have moved by that time, because I'm going to be giving updates in the group on Monday and Tuesday. So if you want to receive the weekly outlook video on Sunday before market opens, you are welcome to join the mentorship group. They'll get this video instantly on their inbox once it's uploaded. So you can join the mentorship, and if you're in the mentorship group, if you haven't subscribed to the channel, make sure you subscribe, guys, so that you don't miss any uploads that I will be doing on the group. And if you are also not in the mentorship and you would like to subscribe, you are welcome to subscribe to the channel so that you get notifications whenever I upload a video for the public. So yeah, I wish you guys good luck and happy trading in the coming week. Thank you.